Welcome back. You're watching Chartbusters. Just 1 hour from now, there will be the Reserve Bank's sixth bi-monthly monetary policy statement. This will be Shaktikanta Das's first policy announcement since taking charge as the Governor of the Reserve Bank of India in December. The last 3 policies have maintained status quo on the repo rate. Will this one be any different this time around? Well, a majority doesn't seem to think so. According to a CNBC TV 18 poll, Ritu Singh is here with more details. Ritu, what is the street expecting? Will it be a hawkish pause or a dovish hike?
Well, you know, logic demands that when you have a budget which promises to boost consumption, the Reserve Bank of India should go into a tightening mode. But that is not something that we should see from the Reserve Bank of India, given how benign inflation has been in the last few months. So 90% of the respondents that we actually polled believe that it will be a status quo policy, as the RBI will refrain from a cut also this time around, given some of the fiscal pressures and the fact that crude prices have been inching up. But there is 100% of the economists that we polled expect a change in the stance of the RBI from calibrated tightening to at least neutral, which will then take them to further rate cuts. And 50% expect at least one, 25 basis point rate cut in this entire calendar year, and another 50% expect 2 rate cuts of 25 basis points each until December. No action is expected as far as the CRR tool is concerned. Economists don't really expect RBI to use this just yet. On the macro parameters, GDP forecast is largely expected to remain unchanged by 60% of those we polled at 7.4% for this financial year. And for the first half of next year, where RBI pegged it at 7.5%, that, many expect will be lowered, given that the government itself is also now projecting a 7.5% growth for FY20. And the first half is typically expected to be slightly slower, and therefore that revision is expected. Now, on the CPI front, there have been 6 revisions in the last 1 year from RBI. This time around, the majority expected to remain unchanged, at least as far as the second half projection for this financial year is concerned. For the first half of next year, 80% are expecting that will also be left unchanged as the RBI, watches for more data that will emerge. The tone of the policy, of course, now, that inflation has been below about 2.19% in the last reading, below 4% for several months in a row. They do expect RBI to sound more dovish, but yes, overall, it will be an important statement to watch out for also, because it is Shaktikanta Das's maiden policy.
Okay, we'll keep an eye out on that one then. In the next few hours, we'll get the verdict coming in from Mr. Das himself. Well, let's slip into a short break. On the other side, we'll focus on a couple of stocks. Siemens and Cummins, both the stocks on our radar. Stay with us. Well, the market's doing quite well, so let's focus on a couple of stocks. Siemens is in higher in today's trading session. Yesterday, they came out with a set of numbers. Overnight, though, there was a pleasant surprise because the overhang on the Indian listed company was lifted. The merger between Siemens as well as Alstom didn't get the go-ahead, and that seems to be good news. Anisha explained that to us.
Well, yes, let me tell you why this was an overhang. So there was a deal with Siemens and Alstom in Europe that was supposed to merge together and make this big railway entity. And the expectation was, as a part of this restructuring, the Indian entity might have to give away its mobility business to the parent company. And this has been an overhang with all of these MNC stocks, that they give away the lucrative business to the parent company, and it causes a lot of, money being taken away from the minority shareholder. Now, on account of this deal being called up by the European Commission, the overhang on the stock lifts. Now there is expected that this mobility unit will not go away to the parent company. It will stay with the Indian listed company, and the revenue stream and the EBIT for the company will keep on coming in. So that's the reason Siemens is going higher. Of course, yesterday the company came out with numbers as well. The street has given a thumbs up. Macquarie, for example, has increased the target price. They're seeing more margin expansion going forward, and hence the positivity could be seen in the stock. Now, coming quickly to Cummins as well, because that one is also buzzing in trade. The news is that the management has actually raised the guidance when it comes to the domestic as well as export business. For domestic, now it stands at 13 to 15%. The 9-month run rate has been 12%. For exports, they have raised it to 4 to 5%. Now, the disappointment, or why this stock is not really taking off, is the exports business in the 9-month has done a growth of 12%. And the management is guiding for a run rate of 4 to 5% for the entire year. And that is what is keeping the street nervous. They are saying that for domestic business as well, there's a bit of uncertainty regarding the elections. And for exports, they are saying that the trend is not very clear. There is no visibility. And that's why we are not raising guidance further. And that's causing a bit of nervousness for the stock.
All right, Insha, thanks a lot for that. So that's as far as Siemens and Cummins are concerned. With that, I believe we've run out of time on Chartbusters, but you stay tuned to CNBC TV 18. Trading Hour comes up next. Thank you for watching.